I hate making price predictions, but I will tell you $100 silver to me is still undervalued. And it is. It's undervalued geologically, mathematically, and from a standpoint of a depleting asset that has plurality in uses. Gold was $600, silver was $600. Well, it wouldn't be so far out of line because that is the geologic ratio right now. And it's a depleting asset. So if you're mining 7 ounces of silver for every 1 ounce of gold, is it really wrong to think that that has to link up at some point? I don't know. I think higher than people think, I will simply say. And I don't think it'll be much into 2026 before we start to see those kind of prices.
$100 potentially on silver, and who knows, maybe $3,000 on platinum, and gold will be on its way to $5,000. How'd you like a little bit of that?
Silver continues to trade below its underlying value despite recent strength. At $100 per ounce, silver would still be undervalued when measured against geology, depletion rates, and its expanding industrial and monetary use. Andyschectman and francishunt highlight that silver is mined at roughly a 7-to-1 ratio versus gold, yet trades at a far wider price discount. Historically, metals tend to reconnect with their natural supply relationships over time. As silver inventories decline and demand broadens across energy, technology, and monetary hedging, higher prices become mathematically and structurally justified. Projections placing silver near $100 by early 2026 do not require extreme assumptions, especially if gold advances toward $5,000 and platinum moves toward $3,000 as capital rotates into scarce hard assets. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
You take a 45-year cup and handle. Technical analysis would say the following. When you have the top of the cup at $50 in 1980 and the bottom of the cup at about $4 in the early 90s, the difference between the two is $46. You add it to the top of the cup when it breaks through, 50 plus 46 is $96. That would be technically before you would even reevaluate where the cup and handle formation would say you're going. I think, and I hate making price predictions, but I will tell you $100 silver to me is still undervalued. And it is. It's undervalued geologically, mathematically, and from a standpoint of a depleting asset that has plurality in uses. Like, how many commodities have uses that expand past one use? This is in so many areas, monetarily, militarily, industrial, and all sorts of capacities, from solar panels to batteries to water purification. All of these things,
right, medically,
has plurality in uses. And so I think, I think $100 is certainly a big round number. And Keith Neumeyer started that many years ago, triple-digit silver. And I remember when he sent me a shirt for Christmas present, I loved it, and I still wear it. And then I made the same shirts myself. I didn't really sell them because I felt bad about copying it. I made them say Miles Franklin triple-digit silver for my staff. I think it's coming, and it's not weird to say it. Look, let me put it this way: if you woke up tomorrow morning and gold was $600, silver was $600, well, it wouldn't be so far out of line because that is the geologic ratio right now. And it's a depleting asset. So if you're mining 7 ounces of silver for every 1 ounce of gold, is it really wrong to think that that has to link up at some point? I don't know. I think higher than people think, I will simply say. And I don't think it'll be much into 2026 before we start to see those kind of prices.
$100 potentially on silver, and who knows, maybe $3,000 on platinum, and gold will be on its way to $5,000. How'd you like a little bit of that? We've always been Super Bull silver. We have told you platinum will be a similar performer and potentially even outperform all three by the time it all ends. It's actually a little ahead of schedule. I was expecting that mid and later that it just storms past silver, but that silver would be front running. Actually, platinum, shockingly, going up real fast, guys. Going up real fast. So that is two white metals in the 140s, 141.1 and 144.49, almost 145% by platinum. That is absolutely huge, and this is an unbelievable year for the precious metals. It would be incomplete not to talk about the old king himself, Old Yeller. Let's get Old Yeller out. How you all doing, Old Yeller? He's a good boy. He's a good boy. Say it nicely now. He's a good boy. Give him a pat, Old Yeller. He's doing great. He's doing great. Let me tell you, the S&P didn't give you 70.16% for the year. The S&P, the NASDAQ hasn't given you that percentage. It's probably around 19 to 20%. Gold gave you 70. People are talking about stock markets. It's not the game. It's like this massive wobbly house, and people are talking about the paint color in apartment on the 19th floor, 1903. Should we really paint it green, the wall? And the whole foundation of the building is shaking and it's trembling like this. No, you shouldn't be discussing that. Forget the stock market. This ain't about stocks unless you're talking miners. This is about a foundation. Everything is built on a fiat and debt-based foundation. Everything is layered on top of that. There is no cake. Stock markets are cherries on the top of the cake. You don't eat a cherry in the middle of a plate. There has to be a cake first. The foundation is fiat and debt, and it is debasing. And rates will go up, and the metals will go up in spite of rates, actually driven further and faster because of debt-based collapse. That's what's happening. That right there is what's happening. Great to have the Philippines in the room. Canada with a K. What are you missing? Yes, thank you. You've helped me a lot. My pleasure. Glad to have been of assistance trying to steer you through reset times, which, by the way, is what our community is all about. Building wealth in reset times. Not normal times, reset times. Specialist topic. Contagion, collapse of a fiat debt Ponzi. How do you maximize your wealth building? How do you protect that wealth? And how do you secure freedoms from yourself while the Pharisees are controlled, demolitioning an entire Western world? That's right. How do you live with that? Well, you get the hell out of the way when buildings are falling down. And right now, the West is a load of buildings that are being leveled. By the way, Merry Christmas, and so glad I discovered your channel recently. Thank you again for the super chat. I plan on reaching out to you in the new year as I'm interested in learning more and becoming part of your trading study group. Yes, please do that. We have our own bespoke platforms. We are actually already working on the next generation. We care. The space that you interact with your friends, colleagues, and community members. I'll be meeting community members in person in Cape Town. I've just met some here in here in Panama. You see, I can't even separate my countries from my metals anymore. We're getting so excited. There's nothing like making easy money. I'm afraid it is easy money. I'm afraid a lot of people are not making easy money. They're making hard money that isn't going far. This is not the planet for nurses, vets, and vocational people and farmers. These are the people that are getting abused and screwed. They are real vocations. This is a speculator society. I didn't ask for this, but I sure as hell will adapt and maximize it to give myself, my family, my friends, and the people around me the best quality of living. That's what we do. That's what you should do for yourself. It's called self-love. It's not greed. It's not love of money. It's love of lifestyle, love of freedom, love of being able to help, love of being able to give. That's what it's about. That's what we want for you, and that's what you should focus on. So let's have a look at gold. 70.16% up. 70.16% up.
Silver's long-term technical structure supports far higher prices without requiring extreme assumptions. A multi-decade cup and handle formation, stretching back over 45 years, places the prior peak near $50 and the base near $4, creating a measured technical objective close to $96 before any reassessment even begins. From a broader perspective, silver remains undervalued geologically and mathematically, especially as a depleting resource amid expanding demand across energy, technology, medicine, and monetary uses. Unlike most commodities, silver is mainly mined as a byproduct, limiting supply response even at higher prices. As fiat systems weaken and debt pressures intensify, precious metals continue to outperform traditional assets. Gold, silver, and platinum have already delivered returns, far exceeding equity benchmarks, reinforcing the idea that capital is rotating toward foundational money rather than financial abstractions. Let's get back to the interview.
Trouble they have. 2 billion ounces of paper contracts against 140 million ounce float. If all of those contracts stand for delivery, big problem. Okay, that sets the stage. So since July, it appears as though that the 5 big U.S. banks that have been involved have slashed their net short exposure by as many as 22,000 contracts. And so in essence, what they're basically saying about this is that through November and December, it appears largely, if not entirely, that the U.S. banks, these 5 banks, are almost entirely out of their silver short, leaving the foreign banks, the 3 big foreign banks and other commercials with the majority, if not all of the remaining exposure. And that's the big issue here, is who's going to be left holding the bag. The U.S. banks, see, the way that it normally works is you short in New York and drive down the price. You go long in London to offset, but it doesn't affect the price. So they told all of their cohorts, yeah, we got to cover, there's tariffs, ship it back. All this metal's been coming back. It's not tariffs, it's reshoring. And the banks over there, they didn't do that. Some of them have. But there is a big short position that is being held by the European banks, if what I'm reading is correct, from very, very reliable sources. And some of it in that article that basically says that, yes, the majority of the U.S. banks are flipping to net long. And if that report is right, that J.P. Morgan, the biggest of them all, has flipped to net long, I mean, that speaks volumes about where the market is ultimately going. And then let's not forget that as of January 1, China is immediately, if not completely, shutting off exports. They are massively curtailing them, and any export that comes out after January 1 will have to have state trading license through Beijing. This matters, Adam, because roughly 70% of the world's silver is refined in China, most of which historically has found its way back into Western markets. The supply is tightening as the demand is increasing. And there are a couple of big European banks that are short. That the systemic chain reaction of it, the contagion, if you will, is something that I think we're not out of the woods yet. But yes, the banks in the West, in the United States, appear to be running for the hills, if you will. The 3 biggest producers in the world in order: Mexico, China, Peru. And I've said on your show and others for the last year that when I talk to guys like Sean Kuhn, the CEO of Dolly Varden, who's told me this flat out, Andy, they're in Peru and Mexico buying silver before it's even refined, in pre-refined stages, in doré and concentrate. Doré are crudely refined bars. Concentrate is a byproduct sludge. So they crudely refine the bars. They send them for full purification refining elsewhere. China says, you know what? We're number 2. You guys are 1 and 3. I'll tell you what, I'll buy all of your doré and concentrate. Don't even list it to the West. I'll pay double. We'll ship it back to China and refine it ourselves. They understand this is playing 3D chess when we play checkers. They have for years been buying this stuff before it ever hits the markets in pre-refined stage, trying to disintermediate the information and the market, and they are positioning for the future. Whereas we sit and worry about, but someone got to Trump. I'm telling you, someone got to him at the beginning and said, if we don't do this, we're dead. And the amount of gold and silver coming into this country since November is so historic. It's a year ago, November. So historic, it's off the charts. And the same thing is true. They've made it a critical mineral. They've put a floor underneath the price of silver. People need to understand this. So the European Union did it at the end of 23. So did we just now. And China says, okay, fine. We are going to curtail, if not completely eliminate exports. It is a what's different this time about other times is this is now geopolitical. This is a race between 2, sovereign powers. And it's not about a couple of brothers trying to exploit the system by buying as many contracts as they can and standing for delivery because they realize the inequity between the bars and the contracts. Same thing we see now, but instead of 2 brothers doing it on leverage, it's China, it's Russia. Yeah. It's India, it's Saudi Arabia, et cetera. And now it's the traders here in New York. Countries that are doing this were never in a position, either in any respect, including just the hubris to challenge the West. They're now coordinated and motivated and sophisticated and wealthy and strong and they're standing for delivery. And then you got the traders here in the West that said, if we don't join into the parade, we're dead. And now you're seeing massive amounts come here. And the people who stand for delivery in hundreds of billions of dollars worth of metal on COMEX, they don't do this for the hell of it. These are the most well-informed traders on the planet. Not the wealthiest, sure, they are, but the most well-informed. And they are always ahead of you and I. They always will be. They're positioned and have been, and China's ahead of them. And so this is a race right now that started out slowly and tiptoeing and, don't tell. And then all of a sudden it's starting to get more and more. But I would ask, where's Jim Cramer? Where's CNBC? Where's Fox? Where's 60 Minutes? Where are any of them? What is happening here? It's just absolute atrocious that the media has not latched onto a story that is as big as anything from a monetary perspective as we've ever seen in our lives, that a whole system is being, in essence, rekindled or changed right in front of us through the massive imports. You don't even hear that silver has been classified critical by the mainstream. They do not tell the public what is happening. And the people following you are so far ahead of the public, it's insane. But that's all you need to see is what the big money does. Don't listen to anything else. The rhetoric will misguide you. Look at what's happening here. And at that level, they don't do it for the hell of it. They just don't.
The silver market is entering a phase where paper leverage and physical reality are colliding. With billions of ounces tied up in paper contracts against a much smaller deliverable supply, risk concentrates quickly once participants begin standing for physical metal. Recent positioning shows central U.S. banks dramatically reducing short exposure, while foreign banks and overseas players appear to be carrying the remaining risk. At the same time, global supply chains are tightening as silver is increasingly treated as a strategic asset rather than a freely traded commodity. Refining bottlenecks, reshoring flows, and export controls are reinforcing scarcity. This is no longer a speculative episode driven by retail traders, but a geopolitical shift where sovereign buyers and institutional players are securing material before it reaches open markets. When the most informed capital moves first, the price tends to follow later. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.